Ask about any market and get an answer. Only for members and only from marketclub.com. Hello investors, traders, and Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your market update for Friday the 10th of January. We're calling it the Big Market Vortex. Now it seems like we're finally getting out of cold, really cold weather here in the mid-Atlantic. Certainly it's been very cold throughout the country. But it seems like the market's beginning to have that sort of polar vortex. It just seems a little colder, not so buoyant. We're seeing some pullbacks, and let's start with the Dow because that's certainly has some indication that's happening. First of all, let's take a look at the parabolic. You see this little line here? Well, we've broken above that line here, and you can see how the market moved up, but now we've reversed that and we've broken below the line, which is right here. You can see the break right here. It seems to me we could pull this market back down to maybe the 16,000 level, and if we pull it into a situation where we take our Fibonacci tool and drag it from the top down, you can see we're looking at the 16,031. So 16,000 certainly would be a target to be looking at in this market. Probably about another 300 points, 350 points more than we are right now. So I definitely think we could see some further softness in this market. Pretty much the same goes for the S&P 500. We haven't had the signal there yet. The signal comes in right around the 1830 level today with a parabolic, and you can see how we have this already a movement down in the Williams percent R indicator, which is indicating it can go further down. It's not oversold yet. These are oversold areas right here. So it's not oversold yet. In fact, it was overbought. So I think we could see this market also come down. Perhaps not as much, but certainly see a pullback from current levels, maybe to the 1800 level from where we are right now. Not a big move. On the NASDAQ, very close there, possible double top that we're seeing. This does not augur well for the NASDAQ, and I think if we take out the lows and we see a move below 4,125, let me just write that down, it will spell further pressure on this particular index. And as you can see quite clearly that we're not oversold like here and here and here and here on this index. In fact, we're up towards the high levels, and so we could see this market come down and become oversold again. It's not there yet. So let's move on. Looking at gold. Gold's making a very valiant effort to move higher. If we put our trade triangles on, you can see it's still mixed. The longer term monthly is still negative, but the weekly is very close to turning around, plus the daily has already turned around today at 1442. So I think we're going to see this market really kind of want to go higher. We've talked about this before, and if we scope this market out even further, you can see this potential of a major double bottom, which is certainly this level here. We talked about this in our report, and this level right here. So if we can see that's the case, and we get a buy signal on our weekly, which would be the first one we kick in, and we see this as a potential, this would be a potential pivot point. If we go over there, then we're looking at this market going up to the $1,600 level over time, not right away, but certainly the market has a feeling like it's trying to build a base, and this is confirmed by this double bottom, potential double bottom, let me say that. So the next market we're looking at is the dollar, the US dollar against the euro, and you can see quite clearly that there's a lot of resistance in this market just over this area right here. You can see just right here, several times we've hit here and we've stopped the euro from going higher. Now the potential is for, of course, if we move over this area, which I think there's a good chance we will do, we'll see this market actually go higher. So here we have our long-term trend, which is right here, and that's positive for the euro. Only the short term, which is right here, is somewhat sideways. So the trend is a 55, a trading range, which we're in right now. But if we trade around here and then eventually move over this level here, the 138 level, certainly we can take from the, let's say, the 134 to the 138. That takes us about the 142 area, and I think that would be an area that we could certainly look at for this market to go to. Once we get the weekly trade triangle green, I think it's an area to get long the euro versus the dollar. We're very oversold. We have a potential bullish divergence there. As you can see, new lows on the prices, and it didn't convert into the Williams percent R. So let's watch that closely next week. Looking at crude oil has really been a sharp move down. You can see we're really short from 96.52 on our weekly, and here we are closing quite a bit lower for the week. Not a good sign for crude oil. However, this market has really good support right around the 90 level, and if we just put that in, you can see right around these levels here, it should begin to find some sort of support for crude oil. We'll see how that plays out. The market's very oversold, as you can see right here, so I wouldn't be surprised to see some sort of reversal from where we are right now. There's a lot to look forward to in 2014. We're looking forward to working with you. Certainly, we hope you're enjoying our Q&A sessions on the blog. That's worked out very well for our members, and we are continuing to enhance that site as well. So let's get together and make some money in 2014. I'm Adam Hewison for Market Club. Every success, and have a great weekend.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.